All right. Hey, guys, welcome back to We Talk Money, episode 105. Today is, what is today? April 5th, 2023.
Yeah, this whole year's just been like cruising.
Yeah, this past month, especially with all the crazy news and inflation, deflation, banking crisis, crypto popping, SEC lawsuits. It's never a boring day in the markets, at least this year. What's going on
That's
with you
right.
guys this week?
It's been kind of quiet on the stock front.
Yeah. Well, I think the biggest news this week is Elon pumping Doge on Twitter.
Definitely the news of the week. Yes.
Yeah,
Oh,
if you
man.
guys look on the twitter.com, Elon changed the logo to the Doge, and I just felt I felt that it was my duty to let I feel like a Elon hater lately, but I mean, I got to call this shit out because let's not forget that the exact day that Elon went on Saturday Night Live, he created the top in Doge's price. So basically, every single person that bought Doge after they saw Elon on SNL lost money. And Doge was down over 90% after that. And you can see, I mean, the plebes are going to do what plebes do, which is they emotionally buy. And we got this big pop a couple days ago when the little avatar changed. But I don't know. What do you guys make of this? Is this the beginning of Dogecoin flipping Bitcoin?
I guess the Fed needs to keep raising rates because the speculation is just continuing.
Yeah, I mean, this is I don't know. And then you got people that are making jokes like, "Oh my God, Elon's just having fun." Yeah, it's really funny. Causing millions and millions of people to lose money on your little pump and dump. And not that I don't know if he made money on it or not, but I don't know. It's just it's a lesson in behavioral psychology. That if you follow trading and investing advice from SNL, you're probably going to lose money.
It's the classic celebrity indicator. There was a show that was making jokes about, was it crypto.com during the Super Bowl, not this past Super Bowl, but the prior one, and how Matt Damon lost everybody money.
Yeah.
Fortune favors the brave. Well, we were brave, but we lost all our money.
Yeah, I think, it's okay to use crypto exchanges, but don't trust them like bank accounts. I think that's where everybody screwed up, right?
Yeah.
Get off, get your shit coins and your fiat off of the exchanges.
Yeah.
Let's talk about what's happening in the markets. So indices actually kind of down big today after climbing over the past week. We had a breakout of the 13K resistance level on the NASDAQ, and now we're pulling back to that as support. Yeah, everything has been holding up so far. It's except for the Russell 2000. So small cap has really been getting hammered. And Trav, I think you said on your podcast that, what was it? The top 10 or so tickers and stocks have been really creating most of the gains in the stock market.
That's right. Yeah. If you look at the performance of the S&P 500 and certainly the QQQ, about 90+% of the positive performance year to date has been driven by 10 to 15 of the largest cap stocks, and particularly obviously the large cap tech stocks like Apple, Nvidia, Tesla, Microsoft, which have all done very well year to date. And those basically account for all of the gains in the overall market. That's not to say that there aren't other stocks in, say, the S&P 500 that are up, but because they're weighted so heavily and because the performance has been so strong, those top tech stocks have masked some weaker performance under the surface with a lot of the other companies in the indexes.
Yeah. Interesting to see. I mean, Bitcoin is kind of been the same situation in the crypto space where dominance has been climbing since kind of mid-March. A little bit of a pullback. So we're starting to see some capital flow back into alts. But, my narrative has been all year that I don't think we're going to get an alt season, at least in the next few months. Maybe I'm wrong. If I am, I'll certainly trade that. But that's just my best guess. I just think that with the regulatory pressure and everything that's happening, I don't know, maybe Elon will be successful in pumping Dogecoin to 1 million, and that'll become the world reserve currency.
He has talked in the past about potentially using Doge as some sort of currency for microtransactions on Twitter. So I don't know if that's the direction he's headed, but it's really hard to figure out where Elon stands on crypto because he seems to flip flop and change his stance every few months.
Yep.
He did the same exact thing with Tesla. He said he was, adding Bitcoin to the balance sheet. And then like a quarter or two later, they were fire selling all of it. So very strange. It's hard to really know what he's up to there.
Yeah. Yeah, interesting. I mean, the crazy thing right now for me, been doing a lot of research on the inflation deflation debate. We talked a lot about that last week. One thing that's just kind of interesting that a lot of people have been paying attention to is gold. So gold is actually about to break a new all-time high. It's, I think, just a couple points off of the prior all-time high from 2020. And I actually surveyed people on Twitter couple days ago. I said, what do you guys think hits a new all-time high first between Bitcoin, gold, and the NASDAQ? And granted, my following is a lot of crypto people, and 47% said Bitcoin, 41% said gold, and only 11% said the NASDAQ. And right after that, I posted a chart just kind of showing the current drawdowns from all-time highs. And on that day, Bitcoin was down about 58% from the all-time high. NASDAQ was 22-ish% from the all-time high. And just a few days ago, gold was about 4 or 5% off all-time highs. And I just thought that was interesting. This is where, you can really start to see bias in people's thought process. Is like you can have a market that's almost at all-time highs, yet people's bias will lead them to believe that Bitcoin will catch up that much quicker. And certainly it could happen, but I just found that interesting that, to me, that's kind of an asymmetric bet. Like I would, if it was a coin flip and you had to tell me to guess which one was going to hit an all-time high first, I mean, I'm going to take the one that's just testing all-time highs.
Yeah. Gold for sure.
Yeah. So what's been driving this, guys? Why is gold so strong this year?
Well, one big driver of gold is often what real rates are doing. And sometimes nominal rates for that matter as well. The other factor that can often drive gold is concerns over financial instability. So we kind of have a little bit of both of those so far this year. So that's why gold we see, I think, is up 11% year to date. And so we've had obviously that pressure in the banking system. We've had central banks in the BRIC countries also looking to potentially diversify out of their US dollar reserves. And then, of course, you do have movements in rates and real rates as well. So that could be one of the big drivers. We have seen rates pull back. And so that is certainly not hurting gold. It's definitely got to be helping somewhat.
Yeah, good point. What else has been popping? I know oil had a big gap up. What are they pulling back on supply again?
Yeah, OPEC Plus with a pretty big surprise cut in production. And so oil went from, sub 70 last week to around $80 a barrel currently. Pretty big move. And that's the first big surprise cut we've seen from OPEC in a couple of years, I think, because OPEC has had cuts in the past, but they've telegraphed it. They've met, they've made a lot of fanfare about previous production cuts. This one kind of came out of the blue and surprised the market a little bit. So that's why we saw that very quick 6-7% pop in crude on Monday when it came out that the Saudis in particular, I think, cutting 500,000 barrels a day. And then a couple of the other countries as well within OPEC Plus also announcing some cuts to production. So that should help the supply demand balance, at least for the near term. We'll have to see. There's a lot of questions in the oil market about what is demand going to look like through the rest of the year. Are we going to see some sort of recessionary impact that could hurt the demand side? And then, yeah, there's other factors as well, but those are on the minds of crude investors right now.
Awesome. So to that point, let's talk about like all the economic data that's been coming out and like, are things shifting back to inflation or deflation? Nikki, I know you posted some charts here about like PMI weakening and job openings, I think, are starting to pull back as well.
Mm-hmm.
Yeah, my read on everything, first of all, we're in a disinflationary environment, which means that the rate of inflation is declining. And so when I looked at the PMI data, I looked this week, we got the services PMI and the manufacturing PMI, and we also got the JOLTS data, which is job openings, basically data.
Mm-hmm.
And my overall take, PMI data is weak. that's no surprise, and the market kind of felt that.
Which for anybody that doesn't know what PMI is or does or how it relates to the economy, what's the explain like I'm 5.
Trav, I think you can explain like I'm 5 better than I can on the PMI.
Yeah, the purchasing managers index is an index it's actually a survey. So they go out and they survey different businesses on both the manufacturing side and the non-manufacturing side, and they survey for different types of conditions. They survey for specific areas like what does demand look like? What does hiring trends look like? What does pricing and inventory data look like in your business and in your industry? And so they aggregate the survey data and they come out with an index based on optimism, pessimism. And so anything under 50 is contraction in the PMI, and then anything above 50 is expansion. And you can have some of those components expanding or contracting within the overall PMI. So you might have inventory expanding, but prices declining or something like that. But there's an overall reading, and then you have the subcomponents as well. So people like to look at these. They're not, 100% scientific. They're not quite as detailed as, say, like the CPI data release, but they do give an idea of real-time conditions, particularly on the manufacturing side. I think it's really helpful, where the manufacturing PMI has been used in the past to predict recessions, a few months or quarters ahead when it starts to really weaken.
Gotcha.
Yeah, that's a great, well done, Trev. I knew you'd nail it. And just kind of my quick overview of what I'm seeing, mainly from the jobs data, is that the labor market, because the labor market is really what we really need to pay attention to right now. We want unemployment rates to stay low. We want people to stay employed, keep their wage gains that they've gotten while inflation is declining, right? That's what we want. And so my overall take is the labor market is slowing, but it's not weak by any means. For example, let me kind of quote this. Within separations and quits, so people quitting or leaving their job, that edged up, but layoffs and discharges, meaning people getting laid off and fired, decreased. And these numbers are actually below pre-pandemic averages. So people are not getting fired. Basically, they're getting fired at a lower clip than they were pre-pandemic. And then as far as the labor market overall, yes, we're seeing some weakness, but it's still we're seeing slowing, but it's still not a weak labor market yet. That's kind of what my take was. Trav, I don't know if you have anything else you pulled from it.
That's exactly right. The JOLTS data is often used to look at leading indicators of what's happening in the jobs market, just as we look at weekly unemployment claims as a leading indicator in the jobs market. By the way, we have a big official government unemployment report that comes out on Friday, the non-farm payrolls report in the US, and that will tell us what the unemployment rate and overall jobs data looks like for the month of March, at least according to the official government data. But yeah, JOLTS is interesting because, like you showed, we saw it be relatively steady in terms of layoffs. That doesn't seem to be accelerating, at least overall. Maybe certain pockets and offset, by strength in retail, maybe a little bit weaker on the tech side. But there was a decline in the number of job openings. And so that could be a leading indicator suggesting that maybe, we are starting to see in aggregate companies pulling back on hiring plans. And so first you would see companies pull back on hiring, and then eventually, if they need to, that's when you start to see more layoffs. And so people saw the JOLTS data. It was lower than expected in terms of the job openings. So again, that leading indicator could suggest maybe some weakening starting to happen in the jobs data.
Awesome. Yeah, I know we've been at historical lows as far as unemployment goes, and that typically happens before a recession, right? So everybody's been trying to use that as I don't know if recessionary gauge is the right way to say it, but yeah, I don't know. I guess this will be something to keep a close eye on over the next couple of quarters.
Yeah, the unemployment rate is always low before it spikes before a recession, right? And that's kind of how it goes. But the big question mark right now going into all of this is, do we see a fundamental difference in just our whole environment coming out of a pandemic? More job openings than we've seen in I don't know if ever, right? Not enough people to fill those jobs. Like, this is this structurally different enough to where we could chug along? That's like the big question mark right now.
Gotcha. Okay, cool. Let's keep rolling on the charts. We'll talk about Bitcoin, which has been consolidating for over 2 weeks. And, again, the NQ and Bitcoin, so stocks and Bitcoin have been following each other relatively closely. But today, stocks are pulling back hard. Bitcoin's still trying to hold up. And in spite of all the negative news that we've had around the regulatory front over the past couple of weeks, and the fact that the US government started to sell and started dumping coins on the market, price has been holding up. And one thing I was saying on Twitter earlier this week was I was getting April 2019 vibes. So if you look at price action where we are now, and we broke out of an accumulation range in January, and we've been slowly kind of stair stepping up, I guess not really slowly, but we've been stair stepping up. If you look back here at January 2019, or sorry, April 2019, you can see that we had similar price action.
Oh,
Where we were coming out of an accumulation range, we broke up, and then up here there was some pretty negative stuff that was happening. I can't remember if it was a Binance hack or what, but on these red days there was actually some pretty quote unquote scary news that came out, and I noticed that price was actually defending 5K support. And so throughout here I was like, man, price is just not collapsing. We had the short squeeze, and then price is holding up, and that led to another, let's see, from that breakout, it gave us another couple of months of upside price action. So I just noticed the correlation there. Now, granted, past performance doesn't mean that the market's going to exactly do that, but I just saw kind of a rhyme. And the fact that we are just over a year prior to the next halving, we are in that window where if the price action is going to hold up and stay in a bull zone, this is where it needs to do it from. So obviously we've got the big 30K resistance area above us. And if we take a look at the monthly chart, you can see that that clear monthly resistance through that 30K zone. So that is the big boss to get through. I think, we've broken through the first boss, which was 25K. And now if we can get above that major level of 30K, I mean, there's really a ton of upside above that. So we'll see. I think the next couple of days and weeks are going to be really telling here. Especially if the NASDAQ can pull back and then bounce off of 13K support. But we'll just have to keep our eyes on that.
that was an interesting correlation that you found in the price action.
Yeah, I was just like, man, this looks really familiar. Have we been here before? And I was like, oh yeah. It's funny how prior market cycles tend to come back and repeat themselves.
So watching those pullbacks and how deep they go or shallow they are is going to be key.
And how price action responds to news events, right? When you're in a bear market and things are fear driven, any type of bad news usually causes a breakdown and a change in or continued bearish market price action. But when things are starting to shift, or you're already in a confirmed bull market, bad news tends to be muted and bought up, and they can be good dip buying opportunities. So we'll see. I don't know if we're there yet. I mean, this market cycle is definitely different than prior ones in that we have more variables and more influences on price. But then again, is this time really different, or is it just another market cycle?
Well, a lot of people are also waiting to see how Bitcoin performs during a recession, right? It was born out of a recession. So it hasn't, I mean, yes, 2020. Okay. But I'm talking something not as extreme as a pandemic and the whole world shutting down.
Yep.
How does it act?
Yeah, absolutely. What else is happening in the markets? I know things have kind of slowed down since the banking crisis, but where are we with that? Are we out of the woods? Are we still in the woods? Is the world ending?
Well, I think it's interesting. We talked about how there is potential for things to calm down before they flare up again, like we saw in 2008. It actually would be fine if we can put this behind us and it's over. That would obviously be great news. We don't want instability in the banking system. We have seen some positive signs. We've seen credit spreads start to tighten a little bit. Rates have been coming in, which does help things like the government bond portfolios and commercial real estate financing. And so there have been some incrementally positive signs. Now, there are still some issues out there. We see even today, like there's a regional bank, Western Alliance, that put out some data. The market didn't like it. It's down 10%. Now, nothing to be, really too distressed about, but still, like the price action in regional banks isn't that strong overall. You've kind of maybe you bottomed a couple of weeks ago, but like it's not like these things have been ripping back higher. In fact, we've seen still pretty weak action in some of the more distressed regional banks like FRC. And so that's still a concern. I think if the economy weakens, if, rates don't go down, then I think people are still going to be concerned about the regional banks. And we also still see more money flowing into money market funds. As far as the data that I saw most recently, we're still seeing outflows into money market funds and away from banks. So yeah, I mean, I'd like to think that we're past the crisis and that we can put that behind us. But typically in prior episodes where we've seen financial market stress, it takes a lot more to put it to bed. And so I'm a little skeptical that we've seen the end of it, but we'll have to see how it plays out.
Yeah, I mean, a lot of these are just kind of like usually when you get a big sell-off, you get some kind of bounce. Imagine if you're, bouncing like a tennis ball, but this is more like a bowling ball where it fell and it just dunk flatline.
Yeah.
My question is, did all of you get text messages from family members and friends saying, should I pull my money out of the bank and buy Bitcoin?
Yep. I had a call from a good friend's dad yesterday who was like, I'm freaking out. What should I do? Yeah.
I
What do
definitely
you
got
guys tell
one.
people?
I mean, if you're at a big bank, you're probably fine. I tell people not to panic, and panicking and pulling your money out is what's going to make all of this even worse, right?
Yeah.
That's
Yep.
going to make it way worse. So, and as far as putting everything into Bitcoin, no.
That's obviously the smart
No.
move.
Please no.
Indubitably.
No, but
I mean, look, when people ask me that, my answer is always the same. Buy an amount that if it went down by 90%, you wouldn't freak out and sell, or if it went up to $1 million tomorrow, you'd have some skin in the game. Like there's a range there that makes sense, and everybody's risk tolerance is different. But I agree. Yeah, you don't want to just make a knee-jerk emotional reaction and sell everything and liquidate all your dollars and then just be 100% Bitcoin and then freak out at the smallest sign of volatility. Like there's risk in Bitcoin too. And the risk is big drawdowns that most people can't stomach, and they don't think these things through. That's why they sell the bottom.
Yeah, well said. I think, another thing is that obviously we wouldn't want anyone, and certainly we're not trying to give specific financial advice because we don't know. People have very, very different financial backgrounds out there. But, if you, for instance, you're just working with like a basic emergency fund, you're probably not going to want to put that in any risk asset, whether it's stocks, Bitcoin, whatever. And so that should be somewhere that you feel is safe, whether it's a big bank, whether it's a money market fund. If you're under the SIPC and FDIC insurance limits, then, you've got some extra safety there. So yeah, I tell people, if you're with an institution that, looks sound, if you're under those insurance limits in a specific account, then you're probably fine. And, when we think about some of these bigger institutions like Charles Schwab or, even the big banks, a Bank of America, for instance, they really are probably too big to fail.
Probably.
So if we have a failure with one of those institutions, then all bets are off and we're all going to be scrambling and hopefully, knock on wood, that doesn't become a problem. I don't think that's going to be an issue. I don't think we're going to be there, but we did get pretty close in 2008 to some pretty significant system-wide failures.
Yep. And if we do, have a hedge, have some Bitcoin, have some gold,
Yeah.
Absolutely. Let's do some Q&A. I know, Nikki, you've got a bunch of questions queued up. Do you want to read them off?
Sure. Let's start with a question. The question is, I invested in VOO, which is an ETF, and VTI, another ETF, and I realize now that they are duplicates. Which is better, sell VOO or buy more VTI? So they are not duplicates per se, but they're pretty darn close. So VOO is a core S&P 500 index fund. So it invests in the top 500 companies in the US, mostly large cap stocks, giant cap stocks. VTI is investing in US companies, but it's investing in small, mid, and large cap stocks. So they're not the same per se, but there's definitely major overlap in both of those ETFs. Major overlap. So something to consider. So which one is better? It depends. Do you want less diversification or more diversification? If you want less diversification and you want to be more concentrated in large companies, then you'd want to go VOO because that's going to be large giant cap stocks. If you want to have more diversification across different strategies, small caps, mid caps, large cap companies, then VTI is going to be the direction you'll want to go. So most people choose something like VTI so that they can get more exposure to different strategies, but that really is up to you. But that's the difference between the two, and there's definitely overlap for sure.
Well said. All right. What's the next question?
How can I see a person's crypto portfolio? I am in a divorce and the ex is hiding crypto.
Oh no.
Yeah.
All right. Well, buckle up for this one, ladies and gentlemen.
Okay. So here's what I'm going to say about that. First of all, and this is coming from a lady. So maybe, they don't know exactly how crypto works. So Chris, I'm going to pull you in on this a little bit. Maybe you can help us out. But basically, it's illegal when you're going through a divorce to hide assets. So that's one thing. Be sure to talk to your attorney and tell them that you think this is happening and you think they have these assets, because they cannot do that legally. Chris, any tips for somebody who wants to find out if someone has crypto?
My brothers out there,
because we know
listen,
it's difficult to find it.
Unfortunately, if your husband has a tragic boating accident and he loses his private keys, I don't know. No, that's the thing with crypto. Like if it's on an exchange and it's on the books, yeah, it's easier to track. If it was acquired outside of an exchange and it's on a hardware wallet somewhere, maybe you never know. I mean, and this is part of the challenge with ownership of crypto, right? Like this is one of the problems that it solves is obfuscating ownership, right? Like what is ownership? If it's not on an exchange and it exists on the blockchain and there's a 12 or 24 word seed phrase that accesses that wallet, who knows the seed phrase, right? Maybe it's not written down anywhere. This is where ownership just gets muddy and murky. And I'm not an attorney. I'm not a tax person. I'm nothing. I have no licenses. I'm just a dude on the internet talking about crypto. And that's a reality of the situation. And so, yeah, I mean, if it's illegal and you're hiding assets, you're probably breaking the law. If you're someone who's in a repressive government and you're trying to get your money out of the country and you can do that by just memorizing a few words, is that wrong? I don't think so. So I don't know. That's just my perspective on the challenge there of like who really owns it and who controls the wallet.
Yeah. Another thing you can do is look at tax documents. So like if it's on an exchange, more than likely this person is getting a 1099. And if you'd be able to sniff that out somehow, search through, ask the accountant that you guys use, see if there's something there. But yeah, if it's not on an exchange, it's usually on a little hardware wallet and he might be hiding that somewhere in the house. So go on a treasure hunt. I don't know. That's like, those are the two ways you can go with it. But legally, this person needs to cough it up and tell where it is.
If there are significant amounts involved, forensic accountants could be brought in, and there was ways to obviously trace where things are moving, especially off of fiat off ramps, so transfers out of bank accounts, cash being taken out of ATMs, like that has to happen first before the crypto is purchased. So you would think
maybe
that
sniff through the bank statements.
Yeah,
there's those withdrawals.
Yeah, there's gonna probably be some crumbs of evidence, but whoo, man,
just don't get divorced, everybody.
And ladies, this is why you need to be paying attention to how to manage money. So
Yeah, sure.
because you
Yeah.
got to know how this stuff works too for these reasons and more. Sorry.
Okay, moving on.
Had to say it.
No, she's right though. I mean, that is something that you don't want to have your head in the sand as a man or a woman.
Yeah.
In any kind of relationship, you don't want to have your head in the sand and not really understand what's happening with the couple's personal, finances.
Yeah.
All right.
Next. What specific things do I have to review before buying a stock or ETF? So why don't we start with buying a stock? Maybe Stock Geek can help us out here. And I know it's not that simple, but
Yeah, maybe we can give the overview and then they can take Travis's boot camp.
Yeah, that's right. I think I also did a video on the Stock Geek TV YouTube channel a while ago. Yes, that channel still exists. There will be a revival of it at some point. I keep saying there will be. But yeah, basically, I mean, the mechanics of buying a stock or ETF aren't that difficult. You basically have to get money over to a major broker. And then once you have it, most people use online brokers these days. And so there's a lot of reputable ones, depending on the country you're in. In the US, we have brokers like Fidelity, Charles Schwab, even some people use newer brokers like Robinhood, more trading focused brokers, interactive brokers, places like that. You obviously want to do your research and figure out which exchanges have been around a long time, which, have, relative safety. But the first step, you basically open an account with one of these brokers. Then you eventually wire in some money so that you have money in the account. And then from there, you basically can, with a couple of clicks, enter in a ticker of a stock or an ETF that you'd like to buy, put in the amount you'd like to buy, send the order off. And if the market's open, hopefully it executes, and then you own shares of stock. And so you're essentially, exchanging that cash for ownership in shares of a company or an ETF. So it's pretty easy. Like, it really isn't that difficult of a process. It can usually take 2 or 3 days at most to open an account and get some money in there. And yeah. And
what
so
are the biggest things you look for before buying a stock? Maybe a few top fundamental.
Yeah, I mean, that really is probably a
Data
topic
points.
for the boot camp or for one of our other courses that we have for free in the community. But, certainly we want to look for things like business health, of the stock you're buying, especially if you're looking to hold a long-term position. So we look a lot at the financials, and we take a look at, things like, what's revenue growth look like? What is profitability? So things like operating profit margins. Does the company have a lot of debt on the balance sheet, or do they have, a relatively safe balance sheet? Those are some obvious ones. And then, of course, then you start to think about valuation. What am I paying? What am I paying per dollar of earnings for this company? Am I paying, some crazy multiple like NVIDIA trades at today? Because if you do that, your probability of earning a high return over time is lower. And so, the cheaper you can buy, we've done some good buying during crises, for instance, like in 2020 and back in the financial crisis. But when you have those opportunities to buy good companies at cheaper prices, you often want to take those. So there's a lot. Obviously, we're just scratching the surface, but certainly that's why we have the community, so people can learn about this. They can kind of learn from us. And YouTube, we've got some videos out there as well on starting your journey as a beginner stock investor.
Yeah, I think that too many people, at least from what I come across, they want to buy stocks and even ETFs, and they think it's just simple. It's like, oh, well, what do I need to look for before I buy the stocks? Like, well, sorry, but this is a full-on skill set. Like, learning how to know what stocks and ETFs to buy. It is a full-on skill set that requires probably hours of you just learning some new things. And I think people don't take it seriously enough. And that's why we do what we do and have the courses and classes that we do. So if anybody is like, I want to buy stocks and ETFs, but I have no idea what to look for or what I should be doing, please take a look at our community, because we have resources for all of this stuff. And Travis teaches how to, do stock picking. I'm very big on ETFs, and I teach all about that. I'm actually doing a special class tomorrow for the community on building an ETF portfolio. So that's something to keep in mind and watch out for, anyone who's in our community. But yeah, it's definitely, there's a lot that goes into it.
Chris, do you ever buy single stocks these days?
Nope. Nikki handles all that. I'm hunting for crypto.
Makes sense. You gotta go where your skill set takes you.
Divide and conquer.
Yep.
Yeah.
I see we got a couple more questions that came in. Dr. Jono was asking, how important is the 200-day moving average for predicting the market? I know in crypto, it's a good barometer of market direction over the long term, obviously, but how do you guys think of moving averages, specifically the 200 period?
I think personally, the 200-day moving average is a very important indicator, probably one of the most important indicators because, if you look back at prior market cycles, you look at 2000, 2008 recessions, even 2020, the 200-day does kind of really hold. Like if you look back at 2008, you can see how price never really significantly got above the 200-day moving average. It tried, but like the 200-day moving average just held strong and price, until we get back above it with conviction, we're still in that bear market environment. And that's why I think it's so interesting what's happening right now in the S&P 500 when I look at how price has moved around the 200-day moving average. It's just very different structurally and more bullish, so to speak. Not to say that we can't see us dip back below the 200-day, but the 200-day is kind of like that authority that the market is constantly watching, kind of a self-fulfilling prophecy, if you will. So that's kind of how I look at it.
Yeah, a lot of individual traders and funds and algorithms, they will bias to the upside when you're above it, and they will bias to the downside when you're below it.
Yeah.
Right? That doesn't mean that you'll only take longs and only take shorts depending on what side you are, but that means like if you're above the 200 period, a lot of trading strategies and systems will just bias. They'll let things run higher when you're above it, and they will take profits quicker on longs when you're below it. So it is, like you said, Nick, it's a self-fulfilling prophecy because so many people pay attention to it. And that's like any technical indicator, right? It's like, why does Fibonacci work? Why do moving averages work? Why does volume profile work? Well, it's because people pay attention to it and they make decisions based on it.
Yeah.
Cool.
Exactly.
Sarah was asking how or should we buy infrastructure stocks? Like, does the infrastructure bill passed create opportunity and value? That's a good question.
Trav, how are you looking at infrastructure? I think it's pretty pricey at the moment. For last I looked at it, I thought,
Yeah,
considering it's holding up well though.
Yeah, it's I do think the dollars being put behind it are real. The question is, how do you play it? Is there an obvious way to play it via stocks? And I haven't found a great pure play way to play that, at least not yet. I mean, there's some large EPC companies that trade publicly. There's
Maybe say
things,
what EPC is for people that don't know.
engineering, procurement, and construction.
Okay.
And so those are like, typically like large firms like Fluor, for instance, ticker symbol FLR. Fluor, builds large, massive infrastructure projects across different countries globally. They'll go and build a big power plant, or, they'll build, some incredibly large structures and things like that. Some companies will do highways. Some companies, will do other types of infrastructure. So, there are these large conglomerate EPC companies, and then there's smaller ones. There's a lot of local contractors that will get work, which are obviously not public. Fluor's done pretty well, and some of those EPCs have done pretty well recently in anticipation already of the spending from these bills. So that's what makes it a little trickier. Now, if they pull back and you can get them at a below market valuation, I think that starts to look a lot more interesting. There's also derivative plays on this, like equipment providers like Caterpillar, CAT. That one's, again, been pretty expensive. It's like it hasn't been trading down to a level that makes it a super obvious great risk reward. The other thing to keep in mind is a lot of this infrastructure spending is slated to happen over like a decade-long period. And so there's a big question as to, how much does this really boost earnings? And so that's what makes it difficult. If it was all going to get poured in next year and these companies were going to double earnings, it'd be one thing. But I've had difficulty trying to figure out how to play these big spending bills through like specific stocks so far.
Cool.
Well said.
It's funny. Nikki, I know when you tweeted about like some questions for the show, I saw this come in and I was like, okay, GPT is already starting the spam game. And I think that, over the next couple of years, like the internet is just going to be flooded with so much crap. It's going to be really hard to decipher like what's real and what's like AI generated. But I've been spending so much time with GPT that I look at this and I'm like, instantly, I know this is like GPT wrote this.
How do you know though?
Well, it's the structure for me. It's the structure of the sentences and it's the quotes. And it's the fact that I think this account posted like 2 responses like
3.
back to back really quickly and
3.
like 3. Oh shit. Yeah. So I don't know. I mean, I'm just like, I've been thinking a lot about this because I've been using GPT to help with content, but not just like copy and pasting. I'm like feeding it ideas, making me think through things differently, and then helping, script out videos or, helping with my new book that I'm writing, like things like that. And I'm like, man, it's going to be a real messy world out there when just everything is automated. And in the blink of an eye, you can create bajillions of, articles and accounts. And I don't know. I felt like the content game was already getting kind of crowded. The amount of stuff on the internet, even though it feels like a ton, is about to just go to atmospheric levels. It's weird.
Yeah. Yeah, I saw some comments on a pretty popular thread. I think it was Reddit or Hacker News the other day where, they were basically saying the future of the internet is going to be an absolute mess with content and avatars and accounts that people aren't going to be able to decipher from, what's real and what's not. And then there's also going to be, lots of AI generated information, half of which is wrong.
Yeah.
But I have hope. I think there will be systems to try to detect that and search engines and semantic search that will try to overcome some of the drawbacks. So it's going to be a cat and mouse game, but I think we're going to, I think we'll figure out as we go along how things need to evolve on that front. But yeah.
Did y'all see the train full of beer that crashed
Yeah.
yesterday? So I saw the image of like the cars like staggered in the mountains. And it was, actually a really nice backdrop to have a train crash. It was beautiful Montana, right? But when I first saw it, I was like, that's a fake image. That is what is it? Mid-Journey created image. That image is not real. And then there was an image of a guy with Coors Light and Blue Moon piled around him on a boat who found, the crash. And I was like, that's fake too. I literally thought all of it was fake at first. And
Wow.
then I researched it and I was like, oh my God, it's like those images were real.
Yeah.
So that's it. And what it got me thinking about was that's the start. That is the start of this mess of not knowing what is real and what is fake.
Yeah, there's going to be an
Hard.
opportunity for like identity verification and authenticity, for particularly for creators and for politicians, right? Like we know like the deep fakes are just going to keep getting better. Text to video is going to be insane at some point, and at that point, once text to video becomes quite good, then we're all going to be in trouble because we're going to have, just videos that are created that make people think that something has happened that hasn't happened, or we've already seen some proofs of concept where like the Tom Cruise videos, or what was it the other day? There was a politician focused one. What was it? Oh man, now I'm forgetting. But there was a Jerome Powell one at one point that I saw that was like reasonably good. Wall Street Bets like put one together. It was pretty funny actually. But yeah, this is going to become a bigger problem, especially when in a world of like nuclear capabilities. It's terrifying.
Yeah, I saw one of Will Smith like just chowing down on pizza, and it was really bad. It wasn't lifelike, but it was interesting how many different shots they could get, and like just fast forward a couple of years. Yeah, it's gonna be insane.
Yeah.
Yep. One more thing, and then we can start to wrap it up. But I also surveyed my Twizzler people, and I said, I was just curious, like, how are people trading today? Because I come from like kind of an algorithmic, semi-automated background, and most of what I do these days has been subjective or discretionary. And I was just curious, like, what kind of trader people are. The first option was fully manual and subjective, basically where you look at a chart and you make a decision in your mind. That was 58% of people. The second is rules-based setups, which is how I trade today, where I have guidelines and a set of rules based on market conditions and what the price pattern is. 28% of people were that. Only about 5 or 6% of people were fully automated. So I thought that was interesting. And then got some pretty interesting comments. This guy said the lazy kind, I went from 20K to 7 figures and back. It's like, whew, man,
Ooh,
I've heard that so many times. So many people that have made a ton of money on paper and then just given it back. And that's why I do what I do. Try to help people not go through that.
I think there's going to be a bright future in, human in the loop type of systematic trading where you have, or just trading and investing in general, where you have, automation to help you filter down. And then from there you have, your human judgment. And I think that's going to happen, not just investing, but a lot of different areas. Even one of the big buzzwords in AI and AI training models right now is reinforcement learning with human feedback. Like OpenAI has done a lot of that in training ChatGPT, where, they have a very sophisticated set of models, and then they have human feedback layered on top of that to make the models better. So I think, like, I can see in investing, for instance, we're already kind of doing that in a lot of ways, where, we use data feeds from all these like companies, and we use third-party data sets and things like that to try to make us smarter. But then, ultimately we still make the discretionary decision. So I think human in the loop is going to become really important with what we just talked about, with a lot of deep fakes, with a lot of like content being inaccurate or having AI hallucinations. We're going to have to, I think, take outputs from AI and still have, at least for some amount of time, humans sort of comb through that and figure out like how to tighten things up and make things correct.
Yeah, absolutely. I mean, AI can do a lot of the heavy lifting and remove subjectivity.
Mhm.
And, a lot of the things that, at least on the trading and investing side, that people struggle with, which is, letting their bias get in the way or not having the confidence to pull the trigger. Well, if you can automate your rules, or at least create rules-based approaches where maybe you override a signal, or you're like, oh, I see why it gave me that signal, but the extra information as a human that I can process tells me that that is not a good signal. Or, hey, I know my system is set up for this type of trade and I see it triggering, but the code isn't giving me a signal. Maybe I need to adjust my code. That's what I used to do in the futures markets. And it got to a point where the edge was just, it was competed out. But I think there is absolutely an edge in financial markets, especially crypto and individual stocks, right? And the more you can automate kind of the boring stuff, or the simple stuff, and then combine that with the power of your experience, yeah, I think it's a winning combination. Cool. So what else? I know we've got unemployment, we've got I think kind of a light load coming up over the next couple of weeks, except for earnings season, right? That's kicking into higher gear.
Yeah, that kicks off more later April, but there'll be a couple of big banks that report mid-April. So that'll be interesting to hear, JP Morgan, Bank of America, what they're seeing in the economy and in the banking system. That'll be really interesting at the start of the earnings season. So that happens, I think, second or third week of April. And then beyond that, we get into pretty heavy Q1 earnings reporting season. So that'll be fun.
Fun is a good word for it.
Let's shake things up. I like the quieter weeks, but I also like chaotic weeks where there's just a ton of stuff happening. That's when I usually get a good trade set up, or there's just good volatility that makes everybody pay attention again.
Oh yeah.
Cool. Nikki, any other final like money wisdom tips or anything you want to talk about before we wrap it up?
I guess one tip that I kind of wanted to bring up, because it came across my desk, basically had someone that I was talking to, and they had a loss, and this actually happened in my own portfolio too. And I ended up selling a loss because I wanted to use the capital for a better opportunity. And I noticed that a lot of people are afraid to sell losses. Like, they have this mental anchor to losses in the portfolio, and they're like, well, I don't want to sell that because I'm down X amount, and I don't, I
It
want to
could
just
come
wait.
back.
Yeah, I just want to wait. And I just want to encourage people, especially in a time like this when the markets are down and certain stocks are down, look at look at that differently. Look at selling losses as more of like a reallocation of capital. Like if you can sell a loss and get most of your money back and deploy it into something that has a higher return potential, then that's a good thing to do. That's smart portfolio allocation. So just don't be afraid. I talked to, a few people and they were afraid of selling losses, and that was, my word of encouragement is that, well, if you're selling a loss, you could be using that capital in a more efficient way somewhere else.
Yeah,
So,
we always say you don't have to make it back the same way that you lost it, which I think is
right.
really important, because you don't want to
That's
just
a good way
become
to
a
say it.
bag holder on something where you're losing further capital, or it's sitting there not earning return, and there's other places where you could be earning return.
Yep. And then there is that like potential that you do sell it and it comes back, but you have to accept that, right? Like there's no certainties. And that's what I love about trading and investing is like, it is such a challenge. And it's like, actually, I know I've shared like 20 of my tweets today, but here's one more I'll share.
They're good
So,
tweets.
hey, I always tell people if they want to find out who they really are, then trade financial markets, because you can't hide from fear and greed, or overconfidence and hesitation, or laziness and overaction. It's the most challenging and rewarding, quote unquote, game anyone can play. And part of that, to y'all's point, is yeah, like what do you do when you have a trade that's underwater or that you're in the red on? And that's why I think having a plan ahead of time is so important, to know like, hey, if this goes against me, where would I get out and why? Because if you don't do that, then you become a cult follower, or a community member, as we say in crypto, where you have these guys that just latch onto one community and they identify their personality with it, and then they lose all their money. Be objective, be unattached to your positions.
Yeah, and like on the stock side, if you've got a name that you thought was going to be, have this, you had this grand plan for it and thought it was going to do so great, and it's just been dead money just watching paint dry in the portfolio. It's like, okay, well, I've got all these other things falling around me, all these other stocks that are falling around me that I'm seeing opportunity in. And I'd much rather put it in something that has a better risk to reward profile than watch paint dry in a stock that's not performing like expected. So, yeah.
Yeah, that's a good little topic there. Cool. What are you guys looking forward to next week? Any big things on the horizon that we need to watch out for?
Next week, I'm upping my cardio. That's what I have on the calendar next week.
That's funny.
I'm poking around on some AI stuff. I'm tinkering, let's say. I might have something for We Talk Money listeners on that front in a week. I can't promise it 100% that I'm going to deliver yet, because I'm actually not totally sure what it's going to come out looking like. But yeah,
well, that's
I have
teaser.
Yeah, I have some fun stuff on the AI side that could be cool. We'll leave it at that.
All right, we're gonna hopefully see a dancing Travis avatar.
I hope it'll be better than that.
I don't know. Well, we're so early. I have low expectations. Eventually we'll be able to automate our brains and, I don't know, have full on conversations without us being there maybe, but hopefully not too soon.
Oh, funny you say that.
Oh, okay. All right. Well, we'll look forward to Travis's creation.
Chris GPT. No, I'm kidding.
Yeah. Cool. Well, all right, guys. Thanks for joining us today. Don't forget to leave us a review on the podcast platform of your choice. If you're watching YouTube, make sure you're subscribed to the new channel. Go to wetalkmoney.com/community to check out our wealth building community. Nikki's got a class tomorrow on ETF. What is it? ETF portfolio allocations?
Building an ETF portfolio from scratch. And it is jam packed, my friends.
Ooh.
And some new research that I did that I'm going to share to show you how to get higher returns on your ETF investments. So
Nice.
That's tomorrow at 7 p.m. Eastern Standard Time. If you're in the community, you'll get access to it.
Cool. All right. Well, thanks for joining me, guys, and we will see you next week.
Cheers.
Take care.